What is going on YouTube? It's Brendan from Market Makers. Guys, we talk about market manipulation all the time in crypto. We don't talk about it very often on this channel in the equity space, but oh boy, does it happen. So my last video on Thursday, I left you guys with the 10-year yield. The market cratered on Thursday. The 10-year yield pushed up to the highest level since summer of 2008. And of course, several months later is when we had Lehman, Bear Stearns, the market collapse, banks go bankrupt, AIG, other firms as well. Now, what happened on Friday? Why didn't the sell-off continue? Why did the 10-year push even higher pre-market and then reverse? Well, Nick Timiraos or however you say his name, the Fed Whisperer, the Wall Street Journal reporter, that's what they call him, the Fed Whisperer, received from his sources the fact that the Fed, after the 75 basis point hike here in November, is going to maybe pause and look around, not be as aggressive. The Fed then, of course, coincidentally, it's all a coincidence, guys, coincidentally sent out Mary Daly, the Fed head, to go out there, who's far left, by the way, on most economic issues. She's also the same Mary Daly that was hot-mic'd, I guess, a month or two ago, talking about how inflation doesn't really affect her or her friends, right? She doesn't understand what the big deal is about inflation. So she goes out and parrots the same message. The Fed maybe needs to slow down, not be aggressive, and look around and see what happens. Now, this was all done very strategically. Why? Because the Fed's entering its 2-week blackout period before the Fed meeting November 2nd and 3rd, and we get that 75 basis point hike. What else is happening, guys? Well, we have the election, the midterms, November 8th, only a couple weeks away. 2-week blackout period. Let's put out some good news, try to hold the markets up, because we don't want the markets to completely crater while the person in power whose party is most likely going to get wiped out, Joe Biden, at least in Congress. Who knows what will happen in the Senate? But this is all done strategically, guys. And you know what? You'll never see Gensler from the SEC investigate any of this. I guarantee you people got rich off of this information. Major market reversal the next day. Friday, everything was negative, and then at open, boom, everything's green. As soon as that Wall Street Journal article comes out, as soon as Fed head Mary Daly comes out there. And is this unprecedented? No, it's not unprecedented. This same guy, the Nick Timiraos Fed Whisperer reporter, he's the one that got the inside scoop before anybody else knew from his Fed source about that first 75 basis point hike when we had that hot inflation several months ago, when they were originally planning on 50 and they went 75, and he of course broke it 2 or 3 days before the Fed meeting. And what did the Fed do? 75 basis points. Guys, it's clear market manipulation. They investigate everything in crypto. You would think maybe they would investigate this. And we just had Bostic, another Fed head from Atlanta, who turns out was trading. Right? Now, they said they investigated this, preliminary investigation at least, and it was inadvertent trades. So I don't understand. He didn't know he was trading and making money, and he didn't know that that would be illegal, being a Fed president from the Atlanta Fed. I mean, it's such a joke, guys. The whole system, as you guys know, is rigged. So on my screen, what do you see? The 10-year yield was pushing up, pushed all the way up to like 4.33, and then reversed. Okay, this is Friday, then reversed from this parabolic shoot up after that news broke, after Mary Daly came out there talking about a pause. So what do we got coming on this week? 'Cause we need to understand the whole environment. We have the big tech reporting earnings. Nothing's on Monday, really. I mean, there's companies on Monday, but not big tech. Let's just pop over there and see what we got. So Tuesday, we have... We got Google on Tuesday, and I think we have, who is it? Meta, maybe? No, Microsoft. We have Google and Microsoft on Tuesday. Wednesday, we have, I think, Meta. Yeah, Wednesday's Meta. And then Thursday is Amazon and Apple. So that's going to be a big day. So we also have the GDP number coming out, as well as the Fed meeting November 2nd, November 3rd, and then midterm elections November 8th. A lot of stuff is jam-packed in here. So what's the base case then? Are we going to be rallying? Well, I wanted to get this video out, but I want to watch futures tonight to see how the markets are reacting, because, again, the 10-year was pumping up. Will the sell-off continue here in bonds? I don't know. I don't know if it's going to continue. if we're still going to have this rise, if we're going to pull back, or what's going to happen here. But when you flip over to the DXY, same thing, guys. The DXY was pumping up Friday all the way up over almost to 114. Okay, we almost got to 114. DXY reversed on the same news and came back down. Now, eventually, all of this is going to go up. The Fed can't do anything. The system's broken. When you print $6.72 trillion in 30 months, and when you print over 30 trillion since the Great Financial Crisis, this is what happens: inflation. Okay, if we look at the inflation index here on what is it? The Cleveland Fed, the predictor of inflation here. So they have PCE. Remember, this is what the Fed looks at, okay? Core PCE and PCE. They had it at 6.27 for September. And in October, they have 6.29. Okay, so it looks like that went up some. And the core PCE, 5.17 for October. These are estimates. Okay, these are estimates. 5.16 from September. This was updated. It says 1021. So we'll see what happens with this. And of course, the CPI, they have it 8.14 for October, which I believe it was 8.2 for September. So inflation is still, if this is accurate, inflation is stubbornly high. Okay. So we'll see if this gives the Fed the opportunity to continue to at least jawbone and be hawkish, or if Powell really does start planning that pivot out. You know, the pivot could be a pause because the markets are going to want to rally. The markets want to rally. They've been oversold. They've been dumping. They want to rally, but the data, the actual macro conditions, economic conditions are horrible for these prices. Okay. So let's go ahead and click through the charts and see what we can see. So if you look at the S&P on the weekly time frame, look at this big bullish candle because of Friday. You know, this big bullish candle, we got our pump up. We're currently at 37.61, and again, it's Sunday afternoon, but we'll see where this goes. Likely targets, if we do break that 38, what I predicted 2 videos ago, and we got to 38 and dumped, right? I got within 30 points of my target and we dumped. But now that we have this potential Fed pivot coming and the market's euphoric, we could look at the 618 at 39.14 or the 1 fib up here at 41.78, okay? And when you look at this, this would also give you, you know, what would this do? Like a double top type structure, again, on the weekly time frame. Because I do believe smart money, not everybody obviously, but smart money, this will be a rally to sell. These are all rallies you want to fade. Guys, everything's going to unwind. All these rate hikes, we're going to be up at 4% after this next 75 basis point hike. All these rate hikes, you won't even feel them in the marketplace until next year. And I do believe you're going to see bad earnings Q1 and Q2 of next year. Now, right now, the whole mantra is earnings are not as bad as feared. So earnings are lowered, but they're not bad yet. Wait until they get bad. So we'll see. You're going to see the market sell off, but you may see this market rally first. And if we look at the S&P on the daily, VWAP from a higher up level, looking at roughly 38.03 again, and you can see we have resistance here from these previous candles over here in this area at that same level, right? So we have this big pump candle right now, no wick, but you know, we'll see what happens in futures. No wick, but let's see if we get up to that 38.03. We got up to 37.68 before, and then we dumped on Thursday, okay? This was that dump, and this is the big pump the very next day off of that news. So if we do get past all that, then you can look at the 1618 at 38.89, and this is the 50-day moving average on the daily time frame. Most of the indices, you remember, 43% of the buying in the indices is algorithmic buying. Bot buying, right? The robot, basically. So they're always looking at they're looking at the 200-day moving average, 50-day moving average. Those are the basic algorithms that are out there. And that's why you see so many technical analysts for these big hedge funds and big firms always looking at the 50 and 200. So these are key areas to pay attention to if this rally does continue past 38.03. If you get past 38.03 and get up here, right, get our Livermore pivot, you can easily see this go up to 38.89. And again, this can go up to that 4100 level if you start looking at that weekly time frame, 4178. That'll get you up to the 50 on the weekly. Okay, that'd be a big target to hit. But we shall see. I don't know how the market's going to react. The market could whipsaw. It whipsawed Thursday, back on Friday. So we'll see how the market does react. if we look at this on the 4-hour time frame, you can see we're still trading in that range. Again, we got to break out above 3803, and 4-hour time, or this is an 8-hour time frame, I'm sorry, but 8-hour time frame, guys. The reason I'm showing you this is the 1618, that 3889, happens to be your 200 and 233. You see that? So you start clicking down through the time frames, and because we're not there yet, you want to see where you're going to make contact. 200, 233, 4-hour time frame. If you notice, this was no contact. This is well above it, okay? You see a 200, 233, well above it. All of this was well below the 200, 233, going all the way up here. So this is the first time in the 4-hour time frame you're going to contact this right around 37.79. You're going to hit the 200 a little bit earlier. 233 is resting on top of that. But that's why I'm looking at these numbers, okay? Because on the 4-hour time frame, you got to flip it, got to hold it, got to start moving up. If you move up, click up to your 8-hour time frame. Do this on all your assets. See where the 200, 233 is. Why is that important? Because we're in a primary downtrend in a bear market, okay? And we're in a bubble. That's why it's important, because you're going to get good trades at these areas regardless of the asset that you're looking at. But you want to get down to that 4-hour time frame and see how the price handles this. So let's go ahead and fast forward to the Nasdaq. Nasdaq on the weekly. Again, you know, my market forecasting pattern, my price pulse pattern based on the Gann market pattern, we got within 250 points here of the Nasdaq of our target. So could we count this as a hit? Maybe this is the 0.5 fib right here. Could we count this as a hit? Maybe this is the rally back up, which would be this wave over here coming back over here, and then it's the leg down. It doesn't matter, to be honest, okay? This is a forecasting pattern. I don't trade off the weekly time frame. These candles are huge, especially when you're trading futures, okay? This is for forecasting to understand market direction. And you can see how accurate these waves have been, okay? Now, regardless of if the rally is starting here or here, doesn't matter, because we're going to zoom in to the smaller time frames to actually build our trades, right? This is where we're actually trading daily peak resistance, 8-hour, 4-hour peak resistance, zooming into the 1 hour to really nail the entry. And if you look at this here on the daily time frame of the Nasdaq, again, trend-based fib using this wave projection here for this double bottom type structure right here, you get the 1618 at 11,782, okay? So if we do come back up, you want to watch, you want to see if you can actually break this cluster of candles and come up here. But at a minimum, you'd be looking, you already passed the 1 fib at 11,264, but you've already hit up here a couple of times. You see this? So you're approaching that 1.128, which is 11,372. If you flip 11,372, I would look for that target of the 1618, 11,782. And of course, you can flip back to your weekly time frame, use a larger wave projection, and see where this goes. And of course, the 618 is even higher. It's at 12,086. Do you see that? 12,086. That may be a good rally target. And then I start looking at, do you hold it or not hold it? But this is what you're doing, guys. On the Nasdaq, all these indices right now, they are pumping from Friday's news, okay? 8-hour time frame on the Nasdaq. Again, there's a 11,782. What's critical to pay attention to here, guys? The 200, 233 higher up. But again, you got to flip this resistance where you already have it, the 1.128, 11,372, because you could just come up, peter out, make a top here, come back down, and then you made a double top, okay? You made a double top just like you did here, and this would have you going down. Now, looking at our gummy worm here, you can see we're already basically at the top of the trend here at the 1.128. So we'd have to have a blowout. We'd have to have a blowout outside the gummy worm, which it's just an indicator. You can get a blowout. But, you know, we'll see. You know, a lot of this is going to depend on the earnings. I can't predict their earnings. I don't know. The earnings, if they're bad, I can tell you right now, if they're bad, the market's going to dump. What's bad? Not meeting expectations. If it's mixed, like maybe it's a revenue hit, but they miss on something else, or they're doing layoffs, they're going to try to bundle this to be the most positive report possible. Okay, that's what they're going to do. So you have to be aware of that. That's why the narrative for the last week of earnings has been not as bad as feared. Not, hey, this is a leading indicator of things are getting worse. It's not as bad as feared. You got to remember, the people you're watching on the media have a bias for the markets to go up. Why do they have a bias? Because they manage money. They make money off of trading your money and charging you fees. Okay, so if you don't want to give them money because 61% of retail believes that we're in a bear market that's going lower. Okay, so more than half the investors in the marketplace think we're in a bear market that is going lower. It's the highest bearish number since when? Since the great financial crisis. Okay, so they want to have this bullish bias. Hey, we can outperform. It's all about choosing the right companies, when in reality everything is unwinding around you. Okay, 8-hour time frame. Let's go to the 4-hour time frame. Well, that's the weekly. I don't have a 4-hour time frame. Let's see where the 200-233 is on the 4-hour time frame. This is what you want to watch. This area right here on the Nasdaq, okay? 11,502, 11,550, right in that range. That's your 200-233. And again, just because, you know, we decelerated here, we fell down, price declination, without ever retesting it since you tested it right here. And look at that rejection on the 200. Look how clean that rejection is on the 200. So that's your first test. Before you go up to the 8-hour, before you go up to the daily to look at your other levels of peak confluence for resistance, watch this 4-hour to see how it handles this, okay? Because it could very easily tap it, come back down, try retest it, fail again, and what do? You make a double top, which the Nasdaq loves to do over and over again. If we jump over to the weekly time frame on the Russell, looking at the Russell here, Russell again has had 4 weekly closes below the 300. Your 200-233 are up here, and again, you've tested this once, and in 5 weeks you got to the 200-233 and got rejected. Okay, so you got rejected here, and you're trying to push back up on the weekly time frame, and that is right at 1785. That's going to be a lot of resistance there on the Russell. So let's see what happens over here when we zoom in. If we go to the daily time frame, 1785, where does that bring us? That's a 382 on this larger trend-based fib projection. You see this trend-based fib projection? Let me go ahead and show you this, where it is. This is measuring from this swing low up to that swing high, down to that swing low. You see this? Your 618 is 1877. So on a daily time frame, here's your 50-day moving average coming down towards 1785. So for the Russell, 1785 is critical. And again, you've tested this level and got rejected here, okay? Also have a VWAP up here from this peak, an anchored VWAP, showing you there's going to be selling coming up to this area. So we got the 50-day moving average. You have 1785. Key resistance point here on the weekly time frame where you've already been rejected hard from last weekly candle at the 200-233 on the weekly. So we need to pay attention to 1785. And if you flip that, guys, I'm looking at the 618 up here at 1877. Why? Because the daily time frame, and this would be the creme de la creme trade right here. Daily time frame, 200-day moving average moving down. And what did we do last time we shorted up here at the 200-day moving average, guys? Look at that price declination. Bear market, you want to short when you can at or at peak confluence for resistance, which on the daily time frame is going to be your long-term moving average, a 20% decline from where we shorted up here. Okay, we talked about it on YouTube, posted the trade in the room, been day trading these swings in the room as well, but this is the big trade. So if the 200 comes to the 618, imagine that, right? No coincidences in trading. The 618, the most commonly retraced 2 fib with the 200 daily moving average, if you rally and get up to 1877, I'm taking this trade. Okay, I'm going to be looking for a top to be made, but I'm taking this trade. Whether it goes above it or just it taps it and starts rolling down, something to pay attention to for sure. Guys, if you want to trade these equities, check out SimpleFX, our beautiful sponsor. Link in the video description as well as the tutorial. You can get up to $5,000 bonus using our link. Nobody else in the business can offer you that. It's because of the relationship I have with Simple. We have a lot of traders there. It's a fantastic platform. You guys will really enjoy it. And of course, our long-term OG sponsor, BITGET, check them out. Link in the video description for all the cryptos. Come see our Discord trading room for community TA education. That link is the join button right underneath this video. Literally says the word join, full integration into YouTube. You can just click it and you're in. Okay, follow the directions and you're in. Let's go ahead and go to the 8-hour time frame on the Russell Fibonacci fan. As you can see, we're kissing the top of the fan where we've been before and got rejected. So tomorrow is going to be critical to see how this handles it, okay? So 8-hour time frame, you can see your 200, 233 are much higher up. So what does that mean, guys? Zoom into the 4-hour. The 4-hour is going to be where your action is right now. In the 4-hour time frame, we have the 200, 233. We got above them before, but we got this big pattern failure up here, supply being dumped on us, and then we made this double top. Okay, we made this double top and then declined. So you can see that, and you can see prices pumping back up to try to retest this. This blue line is a long-term VWAP, anchored VWAP I have from a high peak, okay? And you can see how accurate this has been and helping to find tops. Yes, you can pump above it, but you failed. Lots of resistance here at 1754 on the 4-hour time frame. If the market decides to whipsaw, if the market decides it doesn't care what the Fed, what Mary Daly says, what Nick Timiraos says, you know, if the earnings come out bad, this could be an area right here at 1754 where we do the exact same thing, maybe make some type of shape, pump above it, get a disjointed double top, and start falling back down again, back into our Wyckoff trading range, potentially revisiting these lows. Okay, let's go ahead and jump over to Bitcoin. Bitcoin here on the monthly time frame, we can do a couple different things here. We take our trend-based fib, previous all-time high, market low there, and then the current all-time high, and you can see pretty accurately here. Again, this is how we get that 1618 target of 10,591. Watch my Wall Street Panics video, guys, for all the targets, the ultimate target for me for Bitcoin, explanation of all these patterns. I keep promoting that video here during these regular videos, so we don't have to keep talking about the same targets every single video, okay? So watch the Wall Street Panic video. It came out a week or two ago. You'll find it in my video list. And you can see how accurate this fib has been, right? 17,956 here to 1414. You're just stuck in this range. 1618, 10,591 is ultimately where you're going at some point for a key bounce, okay? And we do have 2 weekly candles left to get there, October 31st, November 6th, and you can see that here on Dante's Descent, okay? This pattern's explained in the Wall Street Panics video as well. Very, very tight range. Still looking for this candle here, okay? 2 weeks from now, October 31st, November 6th, to see what happens, because that should be, if this pattern plays out, that's our tradable bottom, whether it's at 19.5, 15.5, 12.5, 10.5, doesn't matter. According to the pattern, that's the tradable bottom for the next wave up, okay? So that's what we're tracking for that Dante's Descent. Looking at this on the weekly zoomed out time frame, you can see my price pulse pattern beautifully playing out here, and you can see how tight our wave is here, the wave that we're doing here inside our Wyckoff box. We hit the top of the range, tested the bottom, come back up, lower high, tested the bottom again, lower high again, okay? I've drawn this every single video, but you can see what's happening here, and you're getting just week and week price action with a lot of supply being dumped on you here on the weekly time frame. Anchored VWAP up here from this peak on the daily, and you can see a couple different things. Here's your 150 moving average. Now your 200 on your daily, 233. They're way up here, guys. Bitcoin's not coming up here, 25,491, unless there's just a massive rally in equities. And for that to happen, good earnings, or you know, Powell basically comes out like a dove at that November 2nd, 3rd meeting. If he says, so we're doing 75 more, but we're going to pause and look around, or he gives any type of inclination that the Fed may be done for a while and they want to take a break, they're not pivoting because they're still going to raise, but not as aggressively, then you can see this type of rally come up, okay? And I think that's going to line up. Well, I know it's going to line up with our October 31st. That's the amazing thing about this pattern. Think about this. This is a candlestick pattern, Dante's Descent. This candlestick, October 31st to November 6th, encapsulates the Fed meeting. Okay, this is what's so amazing about markets. So this is a bottoming pattern. So you can see what could happen with Powell November 2nd, November 3rd. I think the 3rd is when he gives the speech. November 3rd, when he gives that speech, if he's hawkish, guys, we can come down and meet one of our bottom targets. If he's bullish, that would be the beginning of that wave, potentially the tradable wave up, and it all happens on that candle. That's how amazing this pattern is, because this pattern started back at the all-time high November, okay, 2021. 11 bars down, 9 bars up, 20 bars between tops, no swing high was defeated this whole Dante's pattern of descent. Let's zoom in, looking here again at the daily. Let's look at our downside projection targets, because this may be useful for you guys. Let's go ahead and look at this. So looking at this here on the downside projection, you can see how tight we are on the daily. Remember, we have the tightest compression ever on our Caterpillar, right? The volatility, tightest compression ever. So we do have a big move coming in. 618 is your base here off the trend base fib. 18,646. If you lose that, right? If things do go bearish, if you lose that and you start rolling down, watch 17.5 where you've been before, right over here on the left side of my screen. 16.8, the one fib at 16,000, one spot 128 at 15.2. Then 14.2, then 13.3, and of course the 1618 then from this wave projection here on the daily time frame would be 11,937, and that's your 12K Bitcoin. And trust me, if Powell comes out hawkish, if that inflation really does come in basically the exact same reading as last month, he may not have a choice. He may have to come out hawkish because they've made zero progress on inflation. So he may have to come out hawkish. And if he does and the markets roll, I would say you'd be surprised how quick Bitcoin can fall. But I think a lot of you have been trading Bitcoin, trading the cryptos. You know how quickly it can fall and how violently it can fall. Okay. Same thing if he comes out dovish. Violent rally. Important thing is it's all on that same candle on our pattern, our tradable pattern. Let's go to the 4-hour time frame because this is where some action is. Bitcoin on a little pump right now, pumped above the 200, getting hung up on the 233. Now, again, the markets aren't open yet. It's 5:30 East Coast time. I should say pre-markets, futures, they're not open yet. I don't know what the indices are doing. I don't know how the stock market's looking. Got to see the DXY open. I got to see these things open up before I start looking at doing anything with crypto. That's just my methodology. You guys can do what you want. But as you guys know, we talk about it all the time. Awesome trades, 4-hour time frame at the 200, 233, whether you're making double tops, bearish shapes, or just getting clean rejections off the 200, 233. As you can see, the 233 is providing much better resistance than the 200, right? All of these are circled, including this current candle, which you already got rejected from. But this, if the markets do rally, if they continue that rally tomorrow, you may be flipping this. And then what do, guys? You go up to your 8-hour time frame, look at your long-term resistances there, okay? You want to escalate up looking at your long-term resistances in a primary downtrend. So if we look at this from the upside projection, you're at the 618 at 19,535. Your 233 is right there, and price is 19,474 right now. So this is an area you should watch. And again, I personally would wait to see what happens with the markets tomorrow. But some of you guys like to trade and like to scalp and like to be in and out of trades. This is definitely an area to pay attention to this evening then, okay? And going down to, let's go down to Ethereum. Ethereum pumping up as well. This is our 150-day simple moving average, as you can see, looking at the money flow getting up close to overbought, but not yet. And then we have the Ethereum 618 box, right? We got the 618 1363, the 618 support at 1282. And like we talked about before, I'm looking for the areas here where we poke out of the 618. Okay, getting closer. I want to get up here, challenge that 233. Again, this is a 4-hour time frame. Challenge that 233 and start to make some type of shape or see some type of top being formed like this with supply dumped and overall weakness in the candles. You see that? And this also of course made a double top here. So got a little bit of work to do. This mid-range not interested in, but this here key support 1282, key resistance 13,363 with the 233 lined up. If we bounce over to XRP had that nice price declination, finding support at the 618 at spot 44 cents, basically 45 cents on the daily time frame. Here's your 200, the white line, color line is a 233. You're still ping-ponging here between the two. Now notice you have this candle flyer right here. So if this does come up and find rejection at the 233, come back down, then you do have a double top that formed here. You see that? So always look for these shapes, and the 618 is your neckline, basically 45 cents, okay? Your neckline, you could argue, is a little bit lower down, but in that area, you want to look for some velocity for this to break down if it does roll. If it doesn't roll, then you need to flip that 233 and come up, get your pivot, right? Get your Livermore pivot out of here and move up. And that will happen, again, if Powell's dovish or if the markets continue their rally from Friday. Looking at gold, Gold, as you can see, is reversing. Nice reversal rally here, right? So we can do a couple different things here. Let's do a trend-based fib. Let's get some upside targets because I told you guys I'm not missing out on a short on gold again. So if we do upside targets, you can see with this wave projection, we haven't even got to the 382 yet, so we can do this a couple different ways. This gives you the 618 at 1688. Now remember, your long-term support, which is now resistance, is 1672 here on gold. But I also have it in this Fibonacci channel, okay? And what's interesting, as you approach the top of the channel, what you do, you rolled over, you made a double top, right? So what I want to see is gold come up in this quadrant, just like it did here, okay? I want to see it come up in this quadrant and start to fail. Get above this resistance, start to fail out, peter out, do something exactly like this, because all these assets in primary downtrends have the ability to easily roll and make double tops. Now we can also try just a fib retracement here from the top. Again, this is the 4-hour time frame, but you can do a fib retracement here and you can see it basically lines up the exact same 618 at 1686. So gold has more work to do. Okay, it has more work to do for me to be interested in it. It's rallying because of the rally that happened on Friday. So I want to see this come back up in this upper quadrant between the 618 and this Fibonacci fan and build us some type of top, some type of trading structure that can give me an opportunity to short. Gold right now is at 1657. And again, that'll be open on SimpleFX as well at 6 p.m. Eastern time in approximately 30 minutes. Looking at silver, same thing. They all made this double bottom type structure, 4-hour time frame, pumping up. Here's your 233. So we'll just go ahead and pull a fib retracement and look at this as well. Silver's at 19.40 right now. Let's go to our swing low. We pumped up above the 382, so you might want to watch that 618, the 618 at $20. Okay, $20. That's also the base here of this double tops. You're going to have some candle resistance there as well. So we want to see if we can pump back up and maybe get a failure point right there about $20 and then come back down. Okay, and of course you can always flip these. If the markets continue to rally with this high inflation, remember, forecast is basically almost identical inflation number as last month if the Cleveland Fed is right. So if it's identical inflation as last month and the markets continue to rally and Powell acts dovish, you can definitely see silver metals move up because they are the traditional inflation hedge, and that's what investors are looking for, is a Powell pause, a Powell pivot to get gold and silver to rally, right? Because if you have high inflation and you have a what appears to be a pivot, you're going to see gold and silver rally, ironically, with the equities, which should not happen in a sane world, but that's where we're at, guys. Flipping over to oil. So oil, again, our 45 angle has been tracking beautifully. And, you know, we're just waiting for this to play out. Biden's dumping another 10 million barrels of the SPR strategic reserve on the marketplace. Because why? Because midterms. He asked OPEC to wait 1 month. Why 1 month? Why should OPEC wait 1 month before they do their cuts? Because you get past the midterms, guys. Everything in this market is about political manipulation, economic manipulation, and believe me, people are getting rich both ways. But, you know, what you have here is this basis. If you come back up and fail, once again, double top, right? If the market starts to come to reality and really see that there's a recession coming, there is the chance this could break down even further, okay? Now, in 2008, oil sold off hard. Why? Because everybody realized there's going to be a massive recession / depression coming. The global economic picture was shrinking. Okay, and that's what's happening here. But we also have a supply shortage and we have winter. So again, we have that equilibrium. So this is just something to pay attention to. There will be some big trades coming in oil for certain. All right, guys, 32 minutes. I hope you enjoyed that video. And I'll be talking to you guys on Tuesday. And just keep your eyes peeled for what's happening in the market. Look for those earnings, guys. Watch Bitcoin. It's that key resistance right now. I'll talk to you guys soon. Good night and good luck, everybody.